Have you ever thought about a strange question? If credit cards are really giving you money, then who is actually paying for it? You swipe your card to buy a cup of coffee. The bank gives you 2% cash back. An airline card gives you miles. A premium card gives you airport lounge access, hotel points, and travel insurance. It looks like you won. You didn't pay anything extra. The merchant still got paid. The bank even rewarded you. It sounds like magic. But in the business world, there is a very simple rule. If you can't see who is paying, then usually everyone is paying. The smartest thing about credit cards is not that they let you borrow money. It is that they get society as a whole to quietly subsidize reward card users. Today, we are not here to say credit cards are bad, nor are we telling you to cut up your cards. We are talking about a more hidden system. Why one small credit card can make the things on store shelves more expensive for everyone, including people who don't use credit cards at all. Act 1. The second you swipe, the money doesn't go directly to the merchant. Let's start with a very ordinary scene. You go buy a $10 lunch. You take out your credit card. Beep! Payment approved. You think what happened was this. You paid $10. The restaurant received $10. But that is not what really happens. Several players squeeze themselves into the middle. The issuing bank, the credit card network, the acquiring bank, the payment processor. Each one takes a small cut. This cut has a name, the card processing fee, often called an interchange fee or swipe fee. In simple terms, every time you swipe your card, the merchant has to pay a toll for that payment. And this fee is usually not just a few cents. In many credit card transactions, it can be close to 2% to 3% of the transaction amount, depending on the type of card, type of merchant, industry, and payment method. Sounds small, right? Taking 20 or 30 cents out of $10 doesn't seem like much, but the problem is, the merchant is not selling only one lunch to you. A coffee shop has hundreds of orders a day. A supermarket has thousands of transactions a day. An e-commerce platform has hundreds of thousands of orders a day. Every transaction gets gently shaved down. What is it like? It's like every time you open your doors for business, someone is standing at the entrance charging admission. And the more premium the credit card, the more expensive that admission ticket usually is. If you swipe a regular card, the merchant pays one fee. If you swipe a premium rewards card, the merchant may pay a higher fee. Why? Because your cash back, points, miles, and lounge access do not fall from the sky. They have to come from somewhere. Act 2. Credit card rewards are not gifts. They are a loop. Let's break down this loop. You swipe a premium credit card. The merchant pays a higher processing fee. The bank makes money from that fee. Then the bank takes part of that money and packages it as a reward back to you. What you see is, I earned 2% cash back. What the merchant sees is, I got charged another processing fee. What the bank sees is, this system is working very well. So, what does the merchant do? A merchant cannot absorb all those costs forever. Rent is rising. Labor costs are rising. Raw material costs are rising. Platform commissions are rising. And now every card transaction takes another small slice. So where do those costs go in the end? Into prices. The burger gets a little more expensive. The coffee gets a little more expensive. The clothes get a little more expensive. Online products get a little more expensive. Not every merchant will write it out separately. Because everyone uses credit cards, our store is raising prices by 2%. They won't say that. They will just change the price from $9.99 to $10.49, from $14.99 to $15.99, from $49 to $52. You won't know. You will just feel. Why is everything getting more expensive? Act 3. The harshest part is that people who don't swipe are paying too. This is the most counterintuitive part of the credit card system. If only the people who used credit cards bore the cost of using credit cards, that would be fair enough. You want points. You want cash back. You want lounge access. Then you pay for it yourself. But reality usually does not work that way. Many merchants do not give cash users a completely different lower price. Nor do they set different prices for every type of card. Most of the time, a store has only one price. Pay with a regular card, that's the price. Pay with a premium card, that's the price. Pay with cash, still that price. So here is the problem. If premium credit card users create higher costs for merchants, but everyone sees the same sticker price, then that cost gets spread across all products. In other words, cash users, debit card users, regular credit card users may all be helping subsidize premium rewards card users. This is the quietest redistribution built into credit card rewards. On the surface, the bank is rewarding you. In reality, the reward comes from the entire pricing system. That free cup of coffee you drink in the airport lounge may have been partly paid for by the person downstairs buying a sandwich with cash. That sounds absurd. But that is exactly what makes the system so clever. It does not let the people paying know they are paying, and it does not make the people receiving rewards feel like they are taking someone else's money. It simply makes everyone think they are just buying things as usual. Act 4. Why don't merchants just refuse credit cards, you might ask? If credit cards are so expensive, why don't merchants simply say, we don't accept credit cards? Because in reality, it is difficult. First, customers like credit cards. If the store next door accepts cards and you don't, the customer may simply leave. Especially in markets like the United States, where credit cards are extremely common, many people no longer carry cash. Their spending habits are built around card payments. Even their sense of budgeting is built around cards. Second, credit cards make it easier to spend. Cash creates pain. When you take out $50 and watch it leave, you feel the money disappear. Swiping a card is different. Beep. Done. No banknotes get smaller. No wallet gets emptier. There are even points. So, a credit card is not just a payment tool. It is also a lubricant for consumption. Merchants hate the fees, but they also like the higher spending that credit cards can bring. It is an awkward relationship. It is like a very expensive landlord. The merchant does not like paying rent, but cannot give up the location. Third, many merchants have no bargaining power. Large companies can negotiate fees. Small shops cannot. You are a corner coffee shop. You are a mom-and-pop restaurant. You are a small online store. What can you do? You cannot invent your own payment network. You cannot teach every customer to switch to cash. And it is very hard to pass each processing fee clearly to the exact person who caused it. So, in the end, you can only do one thing: blend the cost into your prices. Act 5. What credit card companies really sell is not payment. It is invisibility. The most powerful thing about credit cards is how beautifully they hide the cost. If every time you swiped your card, the payment terminal displayed a message saying, for this transaction, the merchant will pay a $0.27 processing fee, part of which will fund your points reward, you would immediately feel what this system is. Merchants would be even more unhappy. Customers would also start asking, wait, then can I get a discount if I pay cash? But that is not reality. What consumers see is payment approved. points posted, cash back increased. What merchants see is the month-end statement, the fee breakdown, thinner profits. These two worlds are separated. The person swiping the card cannot feel the merchant's pain, and the merchant's pain gets hidden inside everyone's prices. So the credit card companies accomplish something very impressive. They make rewards look personal, and they make costs look like the market. Fact 6. Why are premium credit cards especially dangerous? We are not saying every card is the same. What really pushes the system to a more extreme level is premium rewards cards. Annual fees of several $100s. Metal cards, airport lounges, hotel upgrades, travel points, dining cashback, sign-up bonuses. These cards look like membership clubs for the wealthy, but they depend on something very ordinary: transaction fees. The more premium the card, the richer the rewards need to be. The richer the rewards, the more money has to be extracted from the system. So a strange picture emerges. High-income people are more likely to qualify for premium rewards cards. They charge more large purchases. They receive more cash back and points. Merchants fold the costs into product prices. And in the end, all customers share the higher prices. This is why some people say the credit card rewards system can sometimes look like a form of reverse subsidy. It is not the rich subsidizing the poor. It is ordinary consumers collectively subsidizing the people who are best at playing the card game and most eligible for premium cards. Of course, not every transaction is this simple. Different countries, different rules, and different merchants all vary. But the direction is clear. The richer the rewards, the less likely it is that the money appears out of thin air. Act 7. Then why does everyone still like it? Because for the individual, using a credit card is often rational. If prices have already been pushed up, then not using a credit card may simply mean you bear the higher price for nothing. Other people swipe their cards and get cash back. You pay the same price and get nothing, so you start swiping too. This is where the credit card system most resembles a trap. It does not force you to join. It makes not joining a disadvantage. If everyone in a movie theater stands up, you cannot see if you stay seated. So you stand up too. In the end, everyone is standing. No one has a more comfortable view, but everyone is more tired. Credit card rewards are similar. As more and more people use rewards cards, merchants' costs rise, prices rise. Then, more people think, since prices are already this high, I might as well get some cash back. So, the system keeps turning. Everyone is trying to save themselves. But everyone's prices are being pushed higher. Act 8. Credit cards have a second money machine. Interest so far, we have only talked about swipe fees, but credit cards have another, more direct and sharper way to make money. Interest. If you pay your balance in full every month, the bank mainly makes money from merchant fees and other charges. But if you start carrying a balance, the story changes. Credit card interest is usually very high. Once you only make the minimum payment, the remaining balance continues to generate interest. Interest piles on top of interest, and the bill starts looking uglier and uglier. At that point, a credit card is no longer just a payment tool. It becomes a very expensive short-term loan. And the most dangerous part is that it does not feel as scary as a loan. A loan makes you cautious. A credit card just makes you think, I'll swipe it first. That sentence feels light. But what comes after it can be very heavy. Credit card companies certainly like high-quality users who pay in full, because they spend a lot and generate a lot of fees. But the truly high-profit users are often those who start revolving debt. They are not earning points. Sure, they are feeding blood into the points system. Act 9. Why can't merchants simply say 3% extra for credit cards? In some places they can. In some places it is inconvenient. In some places it is restricted by rules. In some places customers do not accept it. Even where it is allowed, merchants still hesitate because consumers hate extra fees. If you list the price as $10, then at checkout say there is a 30-cent card surcharge, the customer gets annoyed. But if you set the price at 30 cents from the beginning, the customer may not notice. That is pricing psychology. People hate being charged extra. But they are much more numb to costs that are already included in the price. So many merchants would rather hide the cost in the total price than argue with customers at the register. The result is credit card costs become air. You can't see them, but you keep breathing them in. Fact 10. Who wins in this system? The winners are clear. First, issuing banks. They earn processing fees, interest, annual fees, and late fees. Second, credit card networks. They connect merchants, banks, and payment systems, and every transaction flows through their networks. Third, high spending, high credit consumers who know how to play the rewards game. They can get better cards, higher limits, and more points. Fourth, some merchants, especially large merchants that can use credit cards to stimulate spending and increase average order value. So who loses? Small merchants, cash users, people who do not understand the reward system, people who cannot qualify for premium cards, and people who unknowingly spend more just to earn points. The most ironic part is, some people think they are milking the bank, but the bank may be using its other hand to shear the wool back from the entire system. Act 11. So what should we do? This is not a don't use credit cards video. Reality is complicated. Credit cards have benefits. They are convenient. They offer purchase protection. They provide spending records. They can help in emergencies. People who pay in full really can earn rewards. The question is not whether you can use a credit card. The question is whether you understand that this system has never been free. So, what you really need to remember are these things. First, don't spend more just for cash back. A 2% rebate cannot save you from an impulse purchase. You spent $100 more just to get a $2 reward. That is not earning. That is being led around by the reward button. Second, never treat a credit card as extra income. It is not a salary. It is not a bonus. It is not free money. It is just a small piece of candy handed back to you from a complex system. Third, if you cannot pay in full, none of the rewards matter. You may earn 2% cash back, but revolving interest can far exceed it. It is like a casino giving you free drinks. Not because you won, but because you are still at the table. Fourth, when you see no annual fee, high cash back, huge sign-up bonus, ask one question. Where does this money come from? Once you start asking that question, many consumer traps become much less attractive. Conclusion. The most powerful thing about credit cards is not that they let you buy things you cannot afford right now. It is that they make the whole world look as if no one is paying extra. You swipe. The merchant smiles. The bank rewards you. The points arrive. Everyone looks like they won until prices slowly rise. Until small shops' margins get thinner and thinner. Until cash users pay the same amount but receive no rewards. Until someone buys things they don't need just for the points. Until someone starts carrying a balance and the interest begins to roll. A credit card is not a piece of plastic. It is a very quiet fee machine. It turns merchants' costs into product prices. It spreads those product prices across everyone. Then it packages a small piece of that money as a reward and sends it back to the people who know how to swipe best. So the next time you see the line, earn 3% cash back, don't just look at the cash back. Look also at the question that isn't written there, who paid for it? Because the answer may be everyone, and that is the wallet trap. A credit card is not a piece of plastic. It is a very quiet fee machine. It turns merchants' costs into product prices. It spreads those product prices across everyone. Then it packages a small piece of that money as a reward and sends it back to the people who know how to swipe best. So the next time you see the line, earn 3% cash back, don't just look at the cash back. Look also at the question that isn't written there, who paid for it? Because the answer may be everyone. If you've ever had one of those moments where you feel like, I barely bought anything, so why is my bill getting higher and higher? Or if you think there is another everyday expense that feels like a hidden trap, leave it in the comments. I'll pick a future episode from the comments and break it down. Subscribe to Wallet Trap. Because many of the holes in your wallet were not dug by you. And that is the wallet trap.